Hi friends, welcome back to the channel, and in today's video I'm going to share with you on the small account challenge update. And here we are finally at the end of 1 year, and I am going to share with you the results of this trading account challenge. Alright, let's dive right into it. So first of all, to reiterate on this, why am I doing this series? Actually, my goal itself is I'm trying to see if using these simple strategies, am I able to grow this account by 50% within a year? And the second thing itself is I hope that I can encourage investors to start investing towards their own financial independence also. Third, I want to show you through this journey that you can actually really start small and grow. And lastly, of course, there are any insights and lessons that I've learned. I hope that I can share it with you on this channel. And at the same time, it's also a documentation of the journey for me. So the timeline summary is I started with 10,000 since 15 June 2025. So last month valuation, market pullback itself, and the valuation itself actually dropped to about 13,581. And today's value based on 15th of June 2026, the account value is actually at 14,470. So I fell short on the 50% mark, but I would say that I'm still pretty happy with the results that I have gotten as of now. And out of these 14,470,828 are actually reward credits, and then the rest itself is actually all on the stocks and options trade itself. Okay, so this is actually the 12-month milestone. So based on all this total profit, if I divide it by 12 months, this is approximately about $300 over per month. And in order for you to get 300 plus per month with savings account or fixed deposit, this itself would requires you to actually have about 242,000 invested at 1.5% per annum. So basically, this concludes the challenge, hitting the 1 year mark and the results I have gotten. So let me share what happened last month. So basically what happened in the past 30 days, market has rallied. So this has actually helped the account to recover from the pullback earlier. And the Iran war peace deal is currently ongoing, but this actually brought a bit of relief to the market. And I actually first time traded debit trades in this small account. I generally do more credit trades, meaning I do a lot of like bull put spread strategies to receive income. But this is the first time around I actually did a debit trade in this account when I actually saw the opportunity. Okay, and I learned itself through this series is actually doing investing like this, it doesn't really have to be very complicated. So from this account journey, you have seen that I basically don't really pick stocks. I just invest into ETFs. I do simple trades like bull put spread to get credit incomes along the way. And whenever market actually also give you the chance, you actually have to learn how to take advantage of it. But this itself actually requires you to build up a bit of skill set to identify the opportunities. So when the opportunity arises, you know when to buy or when not to buy, things like that. And of course, going back to this, keeping things simple actually make it very easy to manage. This account, I only manage it on the side. So I don't really like spend one day a lot of time on this. So I only like just spend 5 to 10 minutes a day looking through at this account just to see are there any things to do. Which in fact for the trades, I only also trade only once a week, which I keep things very very simple and very very clean. Okay. So this is the holding summary, screenshot from the Mumu account. So total asset at 14,470. Majority right now is the funds are already invested. Yeah, so cash component itself right now is actually slightly below at 10%. Okay, however, let's say taking a look in terms of the 1 year return looks good, but year to date itself, this year has been a challenging year for this account because what happened is that you actually saw this orange line is actually the account holding. I made quite a few mistakes over here when I was doing the trading, and the drawdown was pretty huge. And as of now, basically you will see that the account from this period of time from Jan till now, in fact, this wasn't the best performance. But looking at this, right, I'm comparing myself to the past 12 months of the S&P 500 return. So if let's say today, if we are looking back at the calendar on 15 June 2025 to 15 June 2026, if today we are going to invest in the SPY stock index, the ETF, so 10,000 itself end up will be actually around 12,000 and $521. So this itself is actually a total profit of about 25%. And with my current portfolio strategy, I'm actually buying the ETS. I'm also doing the trades itself. The ending value right now is at 10,000 to 14,470, but I need to eliminate and remove these credits from the profit over here because these are just like referral credits. Total portfolio credits and profit itself is actually at 3,642. So this itself is still at 36% plus, which I think still a pretty good results, I would say, for an account that I don't really say I'm using a lot of like complex strategies and stuff like that, just keeping things very simple. That is the results of this account. Okay, this is actually the past 6 months results. So I think March, this was the one that actually gave me quite a bit of a devastating blow, which I actually traded on gold, and gold has a pretty sharp drop. Yeah, so be it. This is what happened. There are going to be risks, but it's just that you have to understand that whenever these kind of events happen, a one-off event cannot wipe out your account. You still have to make sure that your account survives and continue to fight another day, which this account did. So far so good. Yeah. But it did brought down actually quite a fair bit of the returns. Okay, current positions holding that I have like a very small components, 0.7 and 0.6% of holdings in Bitcoin and Ethereum, but you would have seen that the drop itself is actually quite drastic. So crypto itself is actually very volatile. Then I do have my like QQQM, which shows about 30% of the portfolio, VOO about 40% of the portfolio. These are actually some of my options trade. Okay, so current exposure right now is about 1%. Then this is actually the debit trade that I did. So this debit trade I did is the first time that I'm doing this debit trade in this small account challenge, and the trade exposure itself is about 4% for this trade. Yeah, so I have already closed off this account I have already closed off this trade for a profit and move forward with it. And I do have some exposure in the SMH, which is the semiconductor industry, which I think with the current AI story, everybody should have something like this in their portfolio. If let's say if you believe that AI is going to be something that is a growing industry going forward. And I do have exposure in the Hong Kong ETF and also the China technology ETF. So exposure is very minimal. It's just about 2% plus and 1% plus. And Tesla is actually a free stock that I've gotten from Momo. Okay, so some noteworthy news that we need to know is basically this is the first thing first. Fed meeting just passed, and basically what happened is that we do have a new Fed chairman, which is Wash, rather than Jerome Powell. So basically, Wash is a new chairman. We do not know that what his style is going to be like going ahead, but definitely some of the key things that he mentioned in the meeting is that we are not going to expect a rate cut so soon with the current data that we are having in the about the inflation in the current market situation. So this is something to take note because if you remember what happened in 2022, when Fed did the rate hike, they increased interest rate. Generally, increasing of interest rate is bad for the economy. Hence, you can see that in the stock market in 2022, stock market suffered drastically because the prices all came crashing down. So if let's say inflation is going to continue to inch up, that is something that we need to take note and then position the portfolio accordingly. So Fed itself currently holds the rate steady in a wash debut, and the stance itself, in fact, is a bit more hawkish. So high interest rate generally is not favorable for bonds because the bond price move inversely to interest rate movement. So you can just think of it this way: higher interest rate, lower bond prices. So if you do have some exposure to the bond market itself, this is something that you might want to take note also. So the rates itself, basically they actually hold it steady, no change to it. But the committee vote currently is, I think there is a new dot plot sheet that was out during the FOMC meeting also. So right now the stance is there are already stands that people thinking that in fact of cutting rates, they might hike rates. So we just have to see what is the news going ahead with all the meetings ongoing. So no quantitative easing and stuff like that. Okay, so this is basically what happened. Okay, so I did a summary using the Gemini to run through a summary. So end of 2026, by right, the median rate projection is 3.44%, which is this is actually implied that they will be cutting the rates. But however, as of now, right now the implication is they are thinking that it might not be 3.4, it might be 3.8, which is this is a slightly higher rate compared to current rates itself. So there is a slight shift or stance. And core inflation itself, actually, in fact, they say that it's still pretty controlled, but we do see that inflation is inching up already. So inflation data, as of now, I think going ahead is something that is very sensitive, that we do have to keep a lookout on the upcoming and latest news. So what's next for this series? I am still going to continue to publish this account on the progress and the new strategies, if there is any, because I'm not sure whether I want to try very new things on this account, because ultimately this account is still limited in funds and it's still a very small account. And I'm gonna try, let's say if there are new things that I wanted to try, maybe like the debit strategies, I would try it on this account to see how it goes. But if let's say if there's any new strategies that I'm trying, I will also share along with my progress, so that it's also a documentation for myself, and at the same time to share with the my friends, like the followers, everybody, that and see that if y'all can pick up any new lessons from it also. And in fact, maybe y'all can share some things that y'all find that, oh, is something interesting that works for you. You can also share it with me. So that will be all for today's sharing. And if let's say you enjoy this series, do feel free to hit on the like and subscribe button so that more videos like this will be recommended to you. So that will be all, and I'll see you in the next video soon.